Well, hello everybody, and welcome to tonight's webinar. I'm Michael Gable, Managing Director at Fairmont Equities. So with the webinar, for those who are new to it, it'll go for 30 minutes. I'll spend the first 10, 15 minutes talking about the market, the opportunities, where I see it going from here, stuff that we've been buying. And then for the final, hopefully at least 15 minutes, will be the Q&A session. So the format of that will basically be like the videos I do on Thursday, the Your Stock Request videos. So there's a Q&A box. Just type in, the code that you want me to look at. I'll try to get through as many as I can, and we can go through the charts together. Basically, with the webinar, it's being recorded, so I'll upload that to the website in the next few days. Won't necessarily be tonight, so just hold tight. I'll get that up onto the website, and I'll send an email around anyway, so everybody can have a look. So what I'll do is we'll get moving onto the presentation. I'll just share the screen. As always, any advice is general only. And just very quickly about us, I mean, most of you are sort of familiar with what we do, but just to reiterate, our main business is in the portfolio management side. So if you need help, you've got a portfolio above 500 grand, yeah, please let me know. We can help you out with the management of that. We only charge brokerage. You get your own HIN bank account. You deal directly with myself and my portfolio manager, Gordon. We could start with a free review, but look, if you don't have 500,000 at the moment, we do have our research report, the Dynamic Investors. So please make sure you are getting that report. Okay, so let's have a look at the US market. So this is a weekly chart of the S&P 500 going back almost 15 years now. Look, obviously the big topic at the moment is Donald Trump and the tariffs. We could spend hours going through the positives and negatives on these tariffs, but ultimately at the end of the day, it is very difficult to figure out, what's going to happen next week, the week after. I think it's one of these things where you could sort of overanalyze it all and still get it wrong. So in some ways, it's best to go back to first principles. Let's zoom out. Let's just look at the price action, and just sort of stick to our rules in terms of when are we getting into stocks, when are we getting out, and not getting caught up in the noise. So if we have a look at the weekly S&P 500, you'll notice that it tends to respect, in major downturns, the 200-week moving average, and that's the blue line. So, I haven't shown the what it did during the GFC, but what it did was it did hit that line, did bounce off it for a while. You got a decent bounce before it did fall down. But ultimately, we could see that outside of COVID, you've pretty much got a bounce off that every single time. So what we've seen recently is a move back very close to that 200-week moving average. We've bounced. Now, if we have a look at sort of what's happened more on a daily chart, as you could see, we've got the blue line being the 200-day moving average. So in the shorter term timeframes, the market tends to bounce off that. Obviously, recently it's broken under that, rallied back up to the 200-day and then rejected. So, we are under it at the moment. We've had a big bounce last week, but yeah, look, ultimately, I think that this is sort of the region where you'd be looking for opportunities. I still think that the market can bounce here. It will find resistance again at that 200-day moving average, but to me, it looks like most of the damage is done. So another interesting chart to look at is so what we're showing here is the percentage of stocks above the 200-day moving average. So as you can appreciate, when the market's doing well, pretty much most stocks are above the 200-day. They're trending, doing very well. When everything breaks down, they go under it. So there's basically two different lines on this chart. So if we look at the black line, that's the percentage of stocks above the 200-day average. So the lower the line, the less stocks above the 200-day moving average. So on the far right-hand side, we could see that we're basically near the sort of previous lows that we've seen in, basically 2023, 22, 2000, 2018. So this chart only goes back about 10 years. But the important thing to note is, where does that coincide with different levels on the S&P 500? So with the blue dotted lines, what we've seen is it has corresponded to turning points. So pretty much apart from in 2022, where it did bounce and then it did come back and go slightly lower. I mean, it pretty much corresponded to some major lows. So have we seen the low? Are we going to go slightly lower? I think that when the market sort of broken down to this extent, you're looking at opportunities to buy. I think most of the damage is done, but you're looking for opportunities to buy. So I think it's a very interesting chart to look at. We'll move on to some other interesting sort of charts, the US dollar. So, look, when I did this webinar, last time I did the webinar back in February, markets were trending, everything was looking good. The US dollar did break above that upper blue line, so it was starting to get a bit of a move on, but we could see that it's sort of broken back down, not only broken back down into the range, but it's now at the lower end of the range and essentially starting to break lower support. I wouldn't be surprised if it bounces in the short term, but yeah, it does look like it's going to head lower. So obviously there's a range of implications there with what's happening with treasuries and bond yields. I mean, we're not getting the flight of safety into the dollar. We're seeing it obviously go into gold, which I'll touch on. But obviously a further decrease in the US dollar is going to have a big effect, a big positive effect on some parts of the market, which includes resources. But just talking about gold, I think it's worth revisiting the chart and what we think will happen there. So obviously we've been quite positive on gold for a bit over a year now. The last major breakout was a year ago when it broke above 2,000, and now it's trading above 3,000. It's obviously done quite a bit in the past week. It's rallied really hard. It's gone up vertically, and I know people can be tempted to take profits. I mean, if you're a bit of a short-term trader, I can understand, but I think there's much more to go. So, if we have a look at this chart, this is basically the gold chart since sort of the late 60s, early 70s. And I've put it on a log scale. So what I mean by that is every sort of unit higher on the chart corresponds to a percentage. And I've circled 3 different regions. So you've got, starting from the left-hand side, that initial massive rally in gold from about sort of $40 an ounce to, almost $600 an ounce. That corresponded to the US sort of moving the US dollar off the gold standards. Huge increase in the gold price. The next major move sort of in the early 2000s onwards, when it went from sort of the mid 200s to about $1,500 an ounce. That corresponded to the Asian financial crisis, the bursting of the tech bubble. So basically, you've got these sort of major sort of global events. In terms of the tech bubble, it was more We're more talking about the the Asian financial crisis there. These major global events see huge increases in the gold price. So what I've circled on the far right-hand side is what we've seen in the past year. In comparison, it's really only just started. So, yeah, and I don't think anyone would disagree that we're undergoing a major global event right now. Trump's only been in office for 3 months. He's there for 4 years. And, there's a lot he wants to get done, whether you agree with it or not. There's going to be a lot happening. And obviously gold's already been moving, and I think we're still at the beginning of the move. So I think that whatever you want to do in the short term, I think gold's got much higher to go. Obviously, it's extended in the short term. So whether you want to sell out and get back in or just wait for a dip to buy, longer term, this looks very promising. So we're still happy to maintain our exposure to gold. So I've got a chart of silver. I get asked, I suppose, often, what do you think of silver? Look, at the end of the day, I've had a look at this. I've looked at other research. Silver tends to lag behind gold up until sort of the last part of the bull run in gold, where it just goes nuts and rallies really hard. So it's not doing that at the moment. So for those that say, oh, gold's run hard, it's hitting the top. Well, we haven't even seen silver really rally yet. So this particular chart, same time frame as the gold chart I just showed. I've put it on a log scale. And what I'm trying to indicate with these sort of curved formations is it's basically forming a big cup and handle. So for anyone that follows a little bit of technical analysis, that's a bullish sign. So you're looking at a break above $37, and you could see a substantial move in silver. Again, like gold, it can go up multiple times in value. It's not happening yet though. So if you had to choose, you'd be in gold. But yeah, look, silver does look good for anyone that's interested. I think the other chart that's interesting, sort of, on the topic of commodities, and look, I've showed this chart before from the guys in the US, Goering and Rosenzweig. This is the commodities to Dow ratio. So essentially what we're looking at is the valuation of commodities compared to the rest of the market. Far right-hand side, that's where we are now. Almost a record low. So anytime commodities get to these undervalued levels, whether it was, as we could see on the left-hand side, Great Depression, they rallied substantially, late 60s, and for those that were around, there were some massive commodities opportunities. We could see in the early 2000s, commodity stocks did really well. And now we're at this deep undervalued level. So just something to bear in mind. When you've got, commodities are cyclical, so they go through periods where they get starved of capital, supply dries up, and then the money's going to more shinier objects in the market. And then when it moves back into commodities, because there's been a lack of supply and the demand's there, the prices go up, and then suddenly all the money goes back into the commodity space, and eventually supply comes back on board, and then commodities crash again. So I think we're at that stage where they've been starved of capital. They're just so cheap. We're going through an era where, do you really want to pay for a stock on a PE of 100 and something when everything's so uncertain now? Or do you want to buy something that's basically just dirt cheap, and there's just not enough supply? So I think that's where commodities are at the moment. Are we going to now see a rotation into commodities? So something we've been mindful of for a while. Look, early to say. We are seeing signs of that happening potentially over the past sort of week or two. But again, look, let's not overanalyze things. When the stocks start to move, we'll see it. They'll be the things to buy. But yeah, it could be a year where, buying your usual go-to stocks doesn't work. It frustrates people, and gold stocks, for example, you think, well, it's too late to buy them, but before you know it, they've gone up another 50% or they've doubled, and you just think, what is going on? I just would not have thought that would happen. But yeah, look, it's happened. It happened 20 years ago. It happened sort of in the early 70s. Yeah, just something to bear in mind this year. So look, what's some of the recent buys? I mean, having said all that, this is a stock that I've been happy to buy last week for clients. Pro Medicus. Is it going to go back to the old high? Is it going to go to new highs? Is it going to suffer from a rotation out of this into commodities? Would this one be immune because it's a great business? I don't know. Let's just go off price action. Not very nice reversal. So this is a snapshot from the Dynamic Investor last week. Actually, no, it was this week. Yeah. So this is one that we bought. We bought last year. We got stopped out on the trailing stop for a profit in December. Got back in, I think, in January, and then we got stopped out. This is for our management clients several weeks ago. I think we took a small loss. But look, now we're back in down here. So I think if you can just be very mechanical about your trailing stops, I think this is an opportunity. Run your trailing stop. Let's see how high it can go. I think this is there's a lot of people that missed out. It ran up to 300, and now we're looking at levels closer to 200. So good opportunity. This is McQuary. A weekly chart of McQuary, again, sort of 240 down to 160 before bounced off a good level. Again, I think if most of the damage is done in the market, this is a stock that could bounce back pretty well. So just pick it up here, have your stop under 160. Maybe it only gets to 220 and it falters, but I think there's still a trade there. And the other one that we bought is BHP. So what I thought I'd show is, so basically, BHP doesn't always, go with the market, but it can go against the market in a good way. So what I've done here is the little line at the bottom, that's the XJO, the ASX 200. And I started it from when the market peaked around 2021. And the pink line is BHP. So you could see that when the market sort of peaked and fell and went sideways, BHP outperformed in quite a decent way. And in the blue line, it's not the exact date, but around about when BHP peaked, happened to coincide with when the market, if you remember, we were talking about the market breaking above 7,600 and entering an uptrend. So when it did that, that's when BHP fell away. Not that I knew at the time that was the top in BHP, but it just shows that if you're bearish and you're worried about the market, and we're going to see a repeat, say, of what we had in 2022, 23, but there'll be opportunities, and they don't have to be small caps. BHP did, as we could see from when the market peaked to when BHP peaked, we're talking over 30% in a market that went nowhere. So there'll be opportunities. And the other chart to look at, this is another chart of BHP. So this is when the line at the bottom is the S&P 500. So sort of starting around when it peaked in 2000. For those that were trading around then, you'll know that it fell quite a bit, and then it managed to get pretty much back to break even just before the GFC hit, and then it fell. So you've got 8-9 years of the S&P 500 going nowhere. And the pink line is BHP. So for several years when the S&P 500 went nowhere, BHP returned almost 500%. So again, if you think the US market will go up, great, there's opportunities. If you're bearish the US market, and let's say we do get this situation I was talking about, where you have a rotation into resources, there'll be opportunities. So we can make money. So I think that's just something to bear in mind. I'm not saying that this will happen again, but let's be open to the possibilities. All right, so let's move on to the Q&A again. If you've got a portfolio you want to get working on together, let me know. Otherwise, please make sure you're getting the Dynamic Investor report. All right, well, let's get rid of this, and we'll move on to the Q&A. So that's the chart there. Again, just let me know if you can't see anything, but I'm going to rip right through it. So first question is on WiseTech. So it's always good to start with a weekly chart. So we could see that WiseTech weekly chart trending up. Pretty much that was a break of the uptrend, but it was obviously in trouble here because you've got fairly small moves, and then you've got this sort of massive volatility here. But look, I think that this thing looks like it can bounce. That's a big sort of reversal here in terms of the weekly candle. But I think the overall trend is over. So I think it'll bounce a bit and then it'll struggle once it gets to that kind of level. All right, the next question is on VAU. I don't know what that is, but all right, so let's, as usual, I think it's good to start with a weekly chart. Look, I guess obviously since these 2023 lows, you've got a pretty decent rally. I mean, that's a sharp pullback, and now you're coming up to resistance. So I suppose you're just looking at, it looks like a hold. Obviously, it's performing much better than the broader market to be up here. But yeah, this kind of move, I think any consolidation, and then you've got the next buying opportunity. Someone's just asked about BHP. I just covered that, so we'll move on to the next one. I think BHP is a buy. AX1, Accent Group. So weekly chart, messy. I mean, I'm looking at something coming up to the old high, rejecting, falling away, price rejection here. Just looks like it wants to continue heading lower for the time being. And what's next? Zip. I mean, this was a brilliant looking trend up until it broke the trend, and you'd say that, you got your higher lows. As soon as it broke that low, that was the turnaround there. So now you've got a downtrend. Bit of a V-shaped move here, but yeah, too early to say that we're getting a turnaround on that one. Resmet, so start with the weekly. Just get rid of some of these previous lines. Look, we've got, this was a great opportunity, obviously, end of 2023, something we spoke about. So it's rallied all the way back up to the old high, and it's come back. Now, it'd be interesting to see if it could turn around from here. Ideally, if it can consolidate in the upper part of this range. So if you get like a Fibonacci tool, let's sort of measure that, we could see that it's pretty much in that top, 38%. I mean, if it starts to come all the way down here, that's a bit of a concern, but it's sort of in the top end. It's just consolidating, I think. On a daily chart, you'd say it's broken the uptrend, but yeah, a lot of major sort of support levels around here. So I think it's one to keep an eye on. Someone's asking me about a couple of gold stocks. Look, it'd be pretty straightforward. Northern Star. Yeah, look, that's I think I had this in the Dynamic Investor. That's basically a, cup and handle breakout. I think it's exceeded the target, which means it could continue on. Overdone in the short term. Just wait, as per my comments earlier on gold, just wait for a pullback. Same with RRL. That's one that we've looked at before, breakout. just, yeah, just buy these gold stocks in a pullback. Okay, next one, Min. Yeah, that's a bit of a disaster, isn't it? Obviously, so just moving to the weekly chart. So we do have this this downtrend. This is where it is now, basically back to 2020 levels. I guess you'd be looking at a bounce from here. Okay, one thing I've just seen on the weekly chart is divergence with the RSI. So what I mean by that is this is when the RSI bottomed and now it's gone up. In that period of time, price has gone down. Often this leads to a bit of a bounce. I mean, where can it go from here? I don't know, but that's the one positive, is that you've got this divergence. What have we got? MCP. Okay, so this is obviously a bit of a downtrend, unfortunately, and I don't see anything positive about that, I'm sorry to say. Moving on, Linus. Yes, I had this in the dynamic investor report this week. We had it, I think, back in October from memory, or was it March as well? That's right, March as well, got stopped out. Now, look, this looks really good. So yeah, we had it in the dynamic investor report on Tuesday. Downtrend, upside break, it's come back, and now it's, yeah, on the way. So that's the daily chart. It's broken above that high. Obviously, this is a big sort of vertical move. The volume's there. I just think any sort of pullback towards $8, you buy it, because if you have a look at the weekly chart, it's going to go back and retest this and maybe even exceed it. So, you know, this big consolidation occurred over the course of almost 3 years. So it means that you should end up with a pretty decent move if you're willing to hang around for most of the year. JB HiFi, sorry, a few lines on this old chart. You've got a stock that was trending well, and like most stocks, you've just got this sort of ugly few months here, this big sort of pullback, sort of breaking support, bouncing back up. If we move to the daily chart, yeah, obviously a lot of damage done here, but this price action, if you think about what the market's done in this time, that's pretty encouraging. So it does look like it wants to head higher. Hard to buy it here because you're going to get resistance here. But you know, if you're putting a stop loss where you put it at that gap, you put it down here, I mean, the risk reward, for me, it'd be a hold, but I couldn't chase it now that it's already made that kind of move. We've got a question, best way to buy into silver. Look, there are some little silver shares around, otherwise ETP MAG. That's basically an ETF that tracks the silver price. So that's one thing you can do. CYL, this was a gold stock that we had in the dynamic investor report earlier in the year. Again, look, any questions on gold stocks, it's going to be the same thing for most of them. You know, in an uptrend, run hard recently, just buy it on a dip. I don't know the particulars about this stock. This was something that we looked at from a charting point of view. But if you're worried about company risk, have a look at, well, firstly, you've got gold, GOLD, that's basically a gold ETF. We've got clients in this. Otherwise, GDX is the Van Eck Gold Miners ETF. So this is an ETF of gold miners. So if one of them has a problem, bad quarterly report or whatever, and it gets smashed, you're going to be insulated because you're holding quite a few others within that ETF. IFL. So I think this was got a takeover or something going on. It's obviously got that weird price action happening. Just move to a weekly chart. So yeah, basically downtrend, 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 starting to go up. And now it's kind of faltering with the rest of the market. Just, I think when the market's done what it's done, you're going to have so many other opportunities. You don't need to muck around with IFL. Next question is on Woodside. Is a good value here? Look, potentially, yeah, these oil stocks could do well. They're not doing anything yet. So I think being in Woodside at the moment, possibly an opportunity cost, as we could see, it's been trending lower for a while. But, you know, like that BHP chart I was showing in terms of how well it did when the market went down, if I just scroll over, you know, if the market peaked around here and fell, Woodside went up. So another case of if the market is going to be in trouble, you know, these sorts of deep value plays can do, you know, commodity plays, not, you know, some, you know, rubbish retailer that trades on a PE of 2 or 3 because they're not a good business. I'm talking commodity stocks. These can potentially do well, but yeah, I think there's an opportunity cost on holding something if it's not going the right way yet. Telex is the next question. We're just ticking over the 30-minute mark, so I'll just do a few more minutes. Look, I like this one. This is a very nice trend. Obviously, it sort of briefly broke it, but it's come back up. Yeah, look, it's kind of trying to get above this sort of major level here near 26. So, you know, that's a good sign. I mean, yeah, just hitting a bit of resistance here, but I think if it can pop above this sort of mid 26s, 27, then I think you've got a buying opportunity. Bannerman. So if we have a look at, I think, a weekly chart, you've got sort of, you know, the major move here, consolidation, next major move, sharp pullback. So it needs to use up some time. It bounced, it's come back. Potentially you've got a double bottom here. So it looks, you know, quite enticing, I think. If you've got to stop under these lows, then you've sort of come back, done your double bottom, and then it looks like it could be setting up for another, you know, sort of move like that. So yeah, I quite like the look of that one. Again, another resource stock. What else do we have? The FANG ETF. Well, that's just yeah, not too different to the sort of NASDAQ really. So I think, you know, you've got, you know, the pullback, the bounce, struggling a bit for now, but I think that, you know, it's going to get ready for another move higher. Can it go to a new high or not? I don't know. I think it's just a case of, you know, try to have some levels for your trailing stop and just see how high it can go. Okay, we've got car sales. Let's get rid of some of these old lines. It hasn't done as great as some of the other tech stocks kind of recently. I mean, obviously this run up here was really good, but you know, if we're looking at what can I do? So if we're looking at sort of the higher lows, I'd say that's, you know, one higher low, here's another higher low. So it's already kind of broken this one, broken that one. Okay, it's reversed here, so I'd expect a bounce, but yeah, I think that we're going to get some, it'll probably struggle up here. So maybe you can get a bit of a 10% bounce. But this seems to be a pretty clear level, just above $36 for some resistance. Someone's asking about PLS and lithium stocks in general. Yeah, look, obviously this is a classic case of, you know, that sort of supply-demand situation with commodities. You know, they looked hot back here. Obviously, a bit of supply came off, starved of capital, massive run, heap of supplies come in, fallen. So look, it has fallen quite a bit. Yeah, look, there's nothing really great on the chart. Maybe this is the low because suddenly commodities are going to go up, but look, maybe not. This is the daily chart. Look, it's had an okay sort of couple of weeks, but yeah, I mean, from a charting point of view, I don't see anything interesting, and I'm not seeing any sort of positive headlines. It'd just be a case of, is it just so smashed up and unwanted that it screams value? I'm not sure, to be honest. All right, so last one, and we have CSLs. So best to look at the weekly. This sort of not much has changed from my previous comments on this. So it's something where you've had a massive run up and then just all sideways. So is it a topping pattern? Is it a big consolidation? I think it's probably a big consolidation. So you look at this and say, okay, well, it's probably a buy here with a tight stop in case it is topping and it falls. You buy it here, tight stop, runs back up here. Maybe you can take profit. But if it ultimately breaks the upper end, you're going to get a huge rally because, again, just a very long consolidation that's happened over a very long period of time. When it does eventually break, you end up with a big move. I'm not saying that's going to happen, but again, just something to bear in mind. So, if it does break that, it's not a case of, oh, well, if it's broken here and it's run up to 350, better take a profit. No, zoom out and have a look at this, because just like the gold chart and a few of the others, once it's as I said, spent so long trading sideways or consolidating, when it does break, you end up with a big move. Hopefully it's to this side and not to this side. So that's why you need your stop. Okay, well, thank you everyone for attending. I'll upload the video onto the website in the next few days and send an email around. Again, if you're interested in the Dynamic Investor, you can sign up to that via the website. Otherwise, if you just have any questions on it or the management service, just shoot me an email, and I'll try to do another webinar in the next couple of months, and I'll let everyone know when the next one is. So thanks again, and have a good long weekend.